Many investors look at convertible bonds through a risk-reward lens, seeking both upside participation and downside risk mitigation. And fundamentally, that's correct. But given that a convertible can act as either an equity or a bond, and at times both, the risk is that if you don't pay close attention, what you may have thought of as a balanced risk-reward position may actually be a closet equity or busted bond position. Let's take a look graphically at our convertible price track and see how that can happen. On the y-axis, you'll find the convertible bond price, and on the x-axis, the current stock price. We begin the price track with two fundamental values. First, the investment value of the bond. Simply put, the investment value is the value of the bond without the conversion feature. It's the value of the bond as a straight bond. Keep in mind that this value is not the same as the convertible securities' market value. Next, we have the conversion value. This value is what the bond would be worth if it were converted into common stock at current prices. At issuance, the number of shares that the bond can be converted into is determined, and the conversion value is simply that number of shares at the current market price. Again, this value is not the same as the convertible securities' market value. Now let's add the theoretical fair value track that factors in inputs like credit spread, equity volatility, and interest rates to create a fair value for the convertible. As the stock price rises and moves to the right, the convertible equity sensitivity increases, and the convertible acts more and more like a stock. Conversely, as the stock price declines and moves left, equity sensitivity decreases, and credit sensitivity increases. Convertibles generally offer their best value to investors when they are in the middle range of the fair value price track, offering a combination of equity participation and bond-like risk mitigation. Because convertibles can act as both a stock and a bond, market conditions of the equity and debt markets impact convertible pricing on a daily basis. It takes an active management approach to deliver a valuable balance for investors. For certain strategies, our Calamos teams will manage portfolios to favor the middle range of the fair value price track to pursue a combination of equity participation and bond-like risk mitigation. But other strategies looking to maximize yield may lean toward convertibles that are said to be busted and perform more like straight bonds. Then again, at other times, portfolios may be managed to maximize the equity sensitivity of the convertibles. If you're an investment professional and would like to learn more about convertibles, please contact your Calamos investment consultant at 888-571-2567 or by email at caminfo@calamos.com.